Okay, so we're going live with M-tron PTI. I'm going to give it a couple of seconds for the audience to populate before we kick it off. Okay, so welcome to the Sidoti Virtual Small Cap Conference, and thank you for joining us today. I'm Anja Soderstrom, Senior Equity Analyst here at Sidoti. And as I mentioned, next up we have M-tron PTI. We have the management team with us. We have Cameron Four, the Interim CEO and CFO. We have Bill Drafts, the President, and Linda Biles, the Executive Vice President of Finance. And this will be conducted as a presentation followed by Q&A. And if you would like to submit a question, you can do so in the Q&A function at the bottom of your screen. And with that, I'm happy to hand it over to you, Cameron. Welcome.
Yeah, thank you, Anja. Good morning, everybody. Thank you for joining our presentation this morning, and thank you, Sidoti, for hosting us. We really enjoy participating in this event and get a lot of great questions in the one-on-one sessions. We've been engagement there, and if there's not a slot available, we're always open to speak to investors, and you can reach us at ir@mtronpti.com. My name's Cameron Four. I joined M-tron last year in September as the CFO, and I was named interim CEO in February. I was excited to join the team to really help take the company to the next level, helping it fuel further organic growth, and also start looking at inorganic growth as a means of expanding our market share. My background is 30 years of experience in tech company management and also advisory roles. I spent the last 15 years running companies from like startups over to ones over 100 million in revenue. I've had some public company experience, a lot of private company experience. I've sold 2 companies, one to Cisco, one to Red Hat. And also I was an investment banker before that and did a lot of M&A deals as well as capital raises. So I'm joined today by a really experienced team. Bill Drafts, our president and COO, who's been at the company for 5 years, and then Linda Biles, our EVP of Finance and our Chief Accounting Officer. And they're each going to be open to help us answer questions today, and also do some presentations. So with that, we'll kick it off. First of all, I would advise everybody to read our safe harbor statement and note further that our investor and potential investors should look at our risk factors in the 10-Ks from last year. It was filed on March 25th, 2024. We will also be filing our 24 10-K towards the end of next week on Thursday afternoon. So the audited numbers will be available in that filing, and we'll have an investor call the next morning on Friday morning at about 10:30, and we'll just give you the finalized numbers for the year, and also be happy to answer any questions you have during that session. So just for those who don't know M-tron well, M-tron has been around since 1965. It's the official name of the company is M-tron Industries. Our ticker on the New York Stock Exchange and the American Exchange is MPTI. We're really an aerospace and defense focused firm since 2004. And in 2004 is when we brought 2 firms together that had relatively similar founding. They were both founded in the mid-60s. This was M-tron, and then PTI was based in Florida. We started making the shift at that point in time to doing more defense-oriented work away from kind of the telecom space. Right now, we have 2.9 million shares outstanding. We have no debt, and we're also free cash flow generating. We ended the year with a strong balance sheet, over 12 million in cash and no debt. And we also have broad employee ownership, and then we did that at the end of 2023. We did some stock option grants to all of our employees, really to kind of align their interests with those of the investors. We are, I think, a unique American story. So we're an American defense contractor. We're in high growth niche markets. We're very specialized. So we make robust microwave and RF products, both components and subsystems, to very exacting standards. And we have a long track record of successful delivery in that space and a really strong engineering team. And we're also one of the few that's vertically integrated RF companies in the US. So we take we take a raw crystal and complete it all the way to producing a finished oscillator or a filter or a module, and deliver it. And this includes doing CNC machinery, surface mount assembly to full suite of testing and screening capabilities in-house, and also really robust design capabilities and high quality process. We're positioned to access long-term value, both as a company executing on growing our stock, but also making acquisitions and doing partnerships. And lastly, we are a platform for growth, having a greater focus, I think, this year than we have in the past on using mergers and acquisitions as a tool. So with that, let me go to the next slide. M-tron at a glance, really this kind of, I think, sums it up. And I mentioned some of these things in the past, but we are a vertically integrated company. We do our manufacturing in the US. We do have an assembly facility in India to let us kind of help reduce costs. We focus on filters, oscillators, resonators, and kind of integrated assemblies. And we're moving up market, I'd say. I mean, we're doing what we do well, but we're also trying to do more for our clients and have greater value add. And so we're continually engineering new products and building subsystems as well. We have a blue chip customer base. Many of our customers have been with us over 10 years. A large portion of our revenue today comes from the defense and aerospace industry, but we also serve other high growth markets. So we're in avionics, and that's really our commercial airframe market, where we're a supplier to both Boeing and Airbus for every single airframe they have. We're active in the space and satellite market. And we're also interested in also growing in several industrial markets like test and measurement, telecom, and others. And then if you look at us over the past 4 years or 3 years since we've gone public, we've had strong returns to shareholders. We spun out in October of 2022. Our stock's been up to $71. It's actually down a little bit now, so I guess that represents a pretty good buying opportunity. But I think we have a unique strategy and really strong execution. We've had 3 years of growth in the near 20% range, which is really a strong testament to our success as a company and strategy. Some of the key takeaways and some of these things we did at early earnings pre-release end of February. At that point, and you can find that on our website, on our IR website, we did publish those results. They're the unaudited results, and the audited results will be out next week. But we have a strong backlog. We had 2 orders over $10 million each received within the past couple of months. Those both announcements were made in January. We're well positioned to benefit from the replenishment of US weapon stockpiles, as well as the defense growth or the increased spending we expect to see in Europe. There's been a lot of noise, obviously, for the defense sector with the new administration, and will there be cuts in the defense area or not? I think actually we have a pretty good defensible position. We're in many of the programs that they have carved out of any potential defense cuts. And if you look at some of the announcements from the Pentagon, they talk about making additional investments than what they've done in the past for precision-guided munitions and missiles, air defense. They talk about creating an Iron Dome, essentially, for the U.S. We also, it's going to be a big investment in maritime capabilities with ships and with UAVs, with airborne UAVs, some of the satellite areas, and also increased communication, as well as EW. And these are all areas that we've invested in as a company, and we think we're very aligned to where the defense budgets are going. In addition, we have a blue chip customer base. So, many of the industry leaders in our key markets have been customers for years, and we expect that to continue. And then our organic growth remains strong, but I think we're looking at a number of joint venture opportunities where we could have shared revenue and profits with partners, and we are engaged with several along that front now. We do expect to make some announcements in the next quarter or so in that regard. And we're seeking acquisitions that could help bring products and customers into our fold, where we could help share our successful model with other companies that are successful but can take it to the next level and would like to be part of a larger organization. And we're also willing to consider larger transformative transactions, people who want to utilize M-tron's listing as a vehicle. And there are a number of PE-backed firms that are, have been on the sidelines in terms of a public stock offering over the years and might want to take advantage of working with us. So, okay. M-tron at a glance, just to give you a greater sense of what we do. We've been providing RF solutions to the market since 1965, and we really focus on spectrum control. So with products such as LC, cavity, and crystal filters, and frequency control with clock oscillators, temperature compensated oscillators, and ovenized oscillators. And we also make integrated module assemblies where we wrap additional functionality around the products that we produce. So we'll purchase products or components from other vendors and integrate them into a module that we deliver for our customer. If you look at the trailing 12 months of revenue, we were at around 46.9. In the announcement that we made end of February, we told the street that we would beat our revenue expectation of 48 million for the year, and we'll make that formally next week. But we have demonstrated strong growth over the past 3 years at close to 20% per annum. We also introduce a number of new products every year, and we have design wins that we expect will have a real impact on our revenue in the years to come. So we do have typically long program cycles when we get involved with a client, where we'll do engineering work with them. When they are in the bidding phase, we'll deliver prototypes that prove out the specs that we've been asked to hit. We'll often go into like a lower volume production as they start delivering first units to their customer, just to prove the designs work and it's stable and it's meeting the specifications required. And then over time, it goes into larger volume production that can last, 5, 10, even 20 years in some cases. And if you look at it historically, our company, we're doing design wins in all these new markets that we'll talk about in a second. But a lot of these design wins will take 3 or 4 years often to get to the larger scale volume production. And we'll introduce even up to 200 products a year, and about 30% of our revenues come from products we've developed over the past 3 or 4 years. So there's always a good harvesting of our engineering ideas and talents that we'll get a design win now, but it'll manifest itself in our revenue growth several years down the road. And that gives us great visibility into the future. Okay. Just some of the markets we're addressing, and this shows you just the broad applicability of the products that we developed. So these are some of the key markets. We have on average, I think, even 16 or 17 slots in every airframe that Boeing and Airbus make. So we provide a rugged, proven, reliable oscillator and clocks and filters for those applications, from flight controls to navigation. There's obviously a lot of communication going on in aircraft now with internet as well, connectivity in planes, and we participate in a number of those different requirements. So we also serve the smaller jet market, but I think if you look at just the overall growth in commercial aerospace, there's a really strong backlog now that we've come out of COVID through 2040 for airframes from those manufacturers. And now that we've gotten past the Boeing strike and Boeing is working out its manufacturing kinks, we do expect strong growth in this sector through 26 onward. Our satellite business has grown significantly over the years, and our capabilities have increased there. The other area that we're experiencing a lot of growth in, we're making a lot of design wins, is electronic warfare. I think this is recognized as being critical to success on the modern battlefield. And you've seen a lot of this or discussion around this in the war that's taking place currently in Ukraine, but also in Israel. The capability of jamming, drones or other types of missiles, etc., spoofing, other things that take place in a modern battlefield. The market that's really been driving us the most over the past couple of years is just our activity in the precision guided munitions area. And this is an area that's going to require a lot of replenishment, as well as if you hear about our ability to defend Taiwan. There's a recognized need within the defense environment that we need to increase our stockpiles of these types of weapons. And then lastly, some of the newer growth areas are drones and radar. We've actually been in the drone market since 2014. We're in some of the larger platforms by many of the larger primes, but we've been designed into some of the drones and products being developed by some of the new up-and-comers. And so I think this will be a strong growth area for us in the future. And then in radar, we're seeing considerable demand there. There's been a redesign of most of the radar systems, and they need to detect a number of different types of targets than they did in the past. So not only, a fast missile, but now they need to detect much smaller platforms that might be very slow moving, such as a drone. And so there's a whole generation of radar that's being developed for the maritime environment as well as air and ground control systems. Okay, I'm going to just touch on some of the investment highlights and then turn it over to Bill for some comments on. But in terms of why we think M-tron's a great investment, we've had strong revenue growth and cash generation. We expect that to continue. This year, I think we'll actually probably end the year with close to 25 million of cash on the balance sheet. Some of that will probably come from just the exercise of the remaining options out there, but the vast majority is just from our continued operations and the cash flow from the operations. We're in a number of attractive end markets with long-term contracts and loyal customers. The programs that we're in, and it's the vast majority now of our defense business. It's, I think, close to 85% of it. Gives us great visibility into out years. We're a PO-based company, so we receive often POs that are, for maybe a year of production. But unless we do something wrong and can't hit a requirement or have difficulty producing or getting a part, we should be in a program throughout its life. So even though we might have an annual contract, we have very good visibility 5 or 10 years out with many of these programs. And we have loyal customers, and that's earned, obviously, in this sector. You have to earn it. We do have a unique capability of producing in the U.S. That's become even more critical. There's a lot of examination about where you build these days and also the sources of your parts. And we've stood up very well in that. I think that's helped our business as we continue to grow in the sector. And we have compelling financials with organic growth already, and I think we'll see some inorganic growth adding to that in the future. And we have the production capability and the management team required to support continued growth. So we've made a lot of investments over the prior years, just fixing what we could fix in the company, smoothing out processes, alleviating bottlenecks, and that's a continual process. And that's really helped us build a kind of a finely tuned machine. So not that everything goes right every day, but I think we have an experienced team that's capable of dealing with it and working through challenges as they come up. In terms of growth drivers, what's driving the revenue of the company? I've talked about this a little bit, but this is the armament and weapon system replenishment driven by the global conflicts. So I think even if we're no longer supplying Israel to the extent we are today, or if we were to curtail our supply of weaponry to Ukraine or other allies, there would be a large replenishment of our own stocks. And we do see European defense spending increasing, and I think we'll see a part of that. There's a lot of modernization going on in the weapon systems. The cycles have become shorter, just as the innovations increased. And we're part of that. All these systems are much more interconnected than they used to be, 20 years ago. And that's all dependent on, or not entirely, but it has a huge dependency on RF componentry and RF systems. We have strong commercial airframe backlog from Airbus and Boeing. I think that'll start to pick up at the end of 25 and go into 26, 27, 28. We are expanding into a number of growing markets like space. And we have strong R&D and manufacturing capabilities investment that's really ready for more program capture. And we're making investments there in our engineering team to build out that capability and just bring in more design wins and eventually large production volume projects. So with that, I want to turn over the presentation to Bill Drafts, our President and CEO. Bill, if you could introduce yourself and take us through a few slides.
Yeah, thank you, Cameron. My name is Bill Drafts, and I've been the president of M-tron PTI for over 5 years. M-tron is the fourth technology company I've run in my 38 career, and candidly, the most exciting one. Part of that excitement is due to our markets. Our end-use total addressable markets are large and growing. In aggregate, our TAM is growing at approximately 7% CAGR, but more importantly, our serviced addressable market is growing faster as we add new product families and expand vertically into solutions. Filters and oscillators drive our component product offering, with filters generating 62% of our revenue and oscillators at 20%. We design and manufacture many different topologies within each family of products, each tailored to a very specific customer need. Resonators and solutions round out our offering. We are one of the few companies in the world that offer a portfolio this expansive, making us a one-stop shop for all our customers' RF component and solution needs.
Okay, thank you, Bill. And Bill's going to be available when we have questions at the end of the presentation. Just briefly on our global footprint, and I talked about how this is a real asset to the company, but we have over 125,000 square feet of design and manufacturing space in 3 locations, 3 primary locations. So our biggest facility is in Orlando, Florida. We also have another sizable facility up in Yankton, South Dakota, really dedicated team there who's been with the company a long time. And then, our newest facility is in New Delhi, India, with about 13,000 square feet of space. All these locations are ITAR registered, with both the U.S. locations having AS 9100 design manufacturing certifications and India having an ISO 9001 manufacturing certification. We also have a sales office located in Hong Kong, which helps us work with a number of Asian customers and contract manufacturers. And we run a very large sales rep organization. It's been quite successful. We have over 28 sales rep organizations we work with throughout North America and the world. We are looking to expand our capabilities in Europe. We do have several reps that already serve European vendors today, but I think that'll be an area of increased focus for us in the future. And altogether, we have over 310 people working across these locations, with about 240 roughly in manufacturing, about 42 in engineering and quality. And the average tenure of our employees is over 12 years, so a great base of experience. And we have over 500 years of radio frequency design and engineering experience in our staff, so that's a tremendous asset in this market. Just in terms of our customer base, we are expanding our customer base every day. So we're securing, kind of future industrial leaders, as well as expanding our reach within a number of blue chip companies. I think actually we looked at it the other day. I think we service all the largest top 10 primes in the U.S. defense market for the past year. They're all customers of ours, and we're trying to grow our market share within each customer, adding design wins to existing platforms and programs. And that's a testament really to the customer-centric focus that we bring to it. So we have over 70 customers who've been with us more than 10 years. Okay. In terms of growth strategy, we're executing on it well, and we've seen good results to date. We leverage our customer relationships. So, we're very tightly integrated with our customers. Our engineers and designers are working with theirs hand in hand, trying to develop products that meet their specs. They're often at our plants and facilities, kind of reviewing what we do and how we do it. And often when we have success in one program, an engineer or program architect will pull us into another opportunity. So we had something like that just happen the other day in the drone space. In terms of R&D, we're very, very market focused. We continue to enhance our ability to deliver by bringing in, new engineers or bringing consultants to help us solve, difficult scientific problems. And we're increasing, kind of the engineering content that we deliver to our customers, and that's helped us raise our ASPs over the years. And then lastly, as we accumulate cash and we're looking at how do we put that to work, we're continuing to make good CapEx investments in our plants and also invest in some of our marketing as well as our ERP systems and FP&A capabilities. But we're also turning more towards M&A and partnership as a means of growth. And we'll talk about that a little bit later in the presentation. So with that, I'd like to turn it over to Linda Biles so you can meet her. Linda is our EVP of Finance. And Linda, if you could just introduce yourself and take the group through some of our financial performance.
Thank you, Cameron. As Cameron said, I'm Linda Biles, EVP of Finance, and I've been with M-tron for 17 years now. Prior to joining the M-tron team, I held various management positions at defense and automotive companies. And I do agree with Bill that M-tron is one of the more exciting companies that I have been with, and I do attribute that to the market, the products, and the fantastic people that we have. What I'd like to do here is go over our metrics since the spinoff in September of 2022, and would like to point out that these are as of the end of Q3. Both our revenues and margins continue to improve. Revenue was up 57% during the period, increasing from $8.4 million in Q3 of 22 to $13.2 million in Q3 of 24. Gross margins have improved by 50%, and we're at 48% at the end of Q3 of 24. This reflects a continued product shift to more complex products, greater program revenue, and margins will vary from quarter to quarter based on the product mix, but we expect our margins over 45%. With our improved scale, we have seen both net income and EBITDA improve accordingly, over 300% and 140% respectively since the spinoff in 22. We are beginning to see a considerable amount of cash accumulation on the balance sheet, even though we continue to make CapEx and R&D investments in the business, with cash standing at over $8.5 million at the end of quarter of Q3. Next slide, please. As we mentioned, we continue to increase our R&D spend on developing and designing new products that's resulting in new program wins. Our CapEx investment also remains strong. This slide shows that the investments are resulting in the building of our revenue, growth in new product revenue in absolute dollars, and the continued increase in ASP as we develop more proprietary designs and products and produce more subsystems and modules. We continue a CapEx spend of approximately 3.5% of revenue, and ASPs here shown are on our produced product, not our sell-through products. Next slide. Okay, Q4 results. Again, these are our preliminary results that we published at the end of February. M-tron finished the year strong with an impressive Q4. Revenues are 18 to 21% over the prior year's Q4, and just slightly less than our Q4 24 results. This is normal seasonality for the business. In addition, gross margins continued their strong showing and substantially outperformed Q4 23 results. Q4 margins are between 47 and 48%. We haven't finished our tax provision yet, but operating income, net income, and EBITDA are expected to be close to the same percentage levels as Q3, and with the long-range goals that we have outlined in prior investor presentations. Next slide. Our full year results for Q4 preliminary show that revenue finished 19 to 20% over the prior year. Gross margins finished the year in the range of 46%, a 500 basis point improvement from the prior year. Over the past 3 years, gross margins have improved over 1,000 basis points, driven by higher revenues, improved manufacturing efficiencies, and improved product mix to higher margin products. We do expect to publish our final results for 2024 next Thursday, March 27th, and look forward to talking with you then. With that, I'd like to turn it back over to Cameron.
Yep. Thank you, Linda. And Anya, I know we're coming against the end of the presentation period, so I don't know if there's a question or two we should answer.
We are. I'm going to squeeze in a couple of quick questions. One question here is if you expect to issue 2025 revenue and EBITDA guidance.
Yeah, we will, but I don't think we'll do it in the next couple of weeks. Next week, we'll focus on giving the 24 results, and then a little later in the year, we will give guidance for the year.
Okay, thank you. And you recently announced two rather large contracts of 10 million. How do they compare to sort of your more normalized contracts, and what can we expect in further contracts like that, do you think?
Sure. Yeah, that's a great question. Those are very large contracts for us. We do actually, as I was saying before, we get annual POs. So both of those contracts were expected, and the first one, which is over 10 million for the year, is something we typically get annually. The other one was a 3-year buy, so roughly 3.5 million a year, 3.25 million a year. Most of anything over $1 million is a large contract for us. And just to give you a feel for it, like in an earlier call, someone asked, how many programs are you involved in? Even in the munitions space, we're involved in over 40 programs. So we have lots of contracts, which gives us a really good diversity of customer and revenue.
Okay, thank you. And another question here is, you mentioned in a press release that you are orienting the company towards achieving corporate scale. Can you elaborate on what that means?
Yeah. So we've actually, really a testament to Bill and Linda and other team members. They've done an excellent job over the past several years improving our margins, getting our operations efficiency improved. And we're at the point now where we can get real leverage out of the model. So we are we've built the systems, and we're continuing to invest in systems to help us scale the business and get operating leverage from the business.
Okay. And also, the warrant dividend that you announced recently, can you just talk about the motivation for that and maybe?
Sure. Yep. No, absolutely. So we have been looking over the past 6 months or so about whether we should be dividending cash, should we be buying back shares, should we be raising capital. We would love to have some more money on the balance sheet, but it was really driven by a desire to reward investors in the company. So we issued our rights. That didn't turn out to be the right approach given just the market volatility that we were seeing in the defense sector. So we did a dividend warrant. The record date is March 10th. So anybody who held the shares before then will receive a warrant. The warrants have not been issued yet, but they probably will shortly within the next week or two.
Okay, thank you. I think we're gonna have to wrap it up there. I mean, you have your earnings call next week, so investors can tune to that too. And I know you have a full one-on-one schedule, but to the extent anyone in the audience would like to catch up with you, I know you're very open to speak to investors. So you can reach out to the management team directly or to us at Sidoti, and we'll put you in touch with Cameron and the team. And with that, I'll hand it over to you, Cameron, for some closing remarks.
Yep. Well, thank you all for attending today. We're excited about our future. We hope you will join us for this ride. We think there's a really good buying opportunity right now in the stock. If you look at where we trade, it's a very low multiple of EBITDA. We do expect our EBITDA to continue to grow strongly. And anyway, we encourage you to reach out if you have any questions about the company. As Anja said, we are very, very open to that. And you can reach us at ir@mtronpti.com. Okay, thank you.
Great. Thank you. Thank you, everyone.